Moments to go into the close of trading, and the markets are down about 57 points for the Dow, but we're off our lows. We have been down more than 90 points for the Dow. Still, we're seeing the biggest pullback in the transports, down 176 at the moment, that we've seen in a couple of months.
They are being killed on two fronts, by the way, both on the regulatory front, the FAA downing about 1,000 planes of American, and, of course, oil closed at a record high today. Our Fox panel is back to weigh in on all this, but first let's check in with Sandra Smith. She's on the floor of the New York Stock Exchange. What is the mood, Sandra?
Hey, Dave. Hey, Liz. Well, right now, a lot of traders are saying this could have actually been a lot worse than it is. We keep talking about how light the volume is, and a lot of traders commenting on the fact that when we have light volume, we can also have very big swings in this market. So we got some of the negative news out there. Traders took it in. We're well off the lows of the day, down now just about 53 points, but continued talk about the fact that Boeing is the biggest gainer in the Dow right now. If it wasn't so big on the day, losses could have been a lot worse, but that's really helping us to hold on here at the end of the day.
Okay, so Peter, when you see the trading movements that we've seen today, with those headwinds from UPS, but a little bit of a tailwind from Citigroup saying, you know what, we have found buyers for our debt. What do you think about the trading?
Well, Wall Street is pretty good at finding buyers. The problem is once you buy, you end up losing money. We ran into those, overhead resistance the other day, as I said, around, 12,700. We're headed back down. We got bad news, because of all the inflation Ben Bernanke is creating. Oil hit $112 a barrel. We broke through some resistance at around 110. We could have clear sailing now up to around 120. We got gold prices up another $20. The dollar is just near record low today against the euro again. There's a lot of bad news out there. The market's more likely to move back down to the lows.
So people buy to lose. That's your philosophy, right?
No, it's not my philosophy.
Wall Street
it's happened to me, but I didn't sell anything yet. Those are paper losses, all right?
That's true.
Look, the fact of the matter is, with all this bad news that Mr. Schiff here talks about incessantly day in and day out, the market's down about 12%. Look, if you take out the financials, if you take out housing, earnings are still pretty good out there in Main Street. That's what we got to think of.
Core economy.
I want to get Jordan in on this. Jordan, you take out. It used to be just if you take out housing.
See,
now it's financial.
economy.
What's next, Jordan? Or is this a classic buying opportunity?
I think as long as we don't go back anywhere near those lows that we saw in January, I think we're okay. The key would be to watch the transports. Obviously, there's a little sensitivity today with the price of oil trending higher, but the transports, I think, hold the whole key. And if you look at the sectors that last year got thrashed the most, the financials, the home builders, selective retail, but especially the transports, the action's been better in the last week. This is a very healthy digestion so far. Hopefully it doesn't morph into more than this. But as of last Tuesday, we had an accumulation. The Dow showed an accumulation day 2 weeks ago, a follow-through day, if you will. The S&P and the NASDAQ confirmed that. We're having some backing and filling today. I think people are a little goosey about the price of oil. Commodities bouncing a little bit here, but I wouldn't call this game over at this point.
And Terry, the market is still up above 12,500. And to Mike's point, we had a guy on who buys a lot of houses, these foreclosed houses, in lots of 20 and 30 and so forth. He says there's no economic problem that the right price can't fix. And apparently Citi is finding those prices now.
I was absolutely stunned that Citi had $12 billion worth of stuff that was only worth 90 cents, because it's been trading like all of its stuff is worth 50 cents. So, they get a 10% haircut, and I guess this deal's going to get done. But, the stock didn't even go up on that news. And, Jordan has a point. I mean, there's no more economically sensitive stock, I would think, than UPS. I mean, it reflects what's going on in retail, reflects what's going on in business, it reflects the price of oil. And
transportation.
We saw that's what, was going on today. So we do have to watch the transports. But I also agree with Jordan that the market's looked pretty good here the last couple of weeks, and the transports probably will tell the tale.
Peter, you talk about gold jumping once again, $20?
Something like
but
that.
we're way off the earlier highs, which was 1,033.
Oh,
I
sure.
believe. Yes.
Markets.
Okay. Here we are at $938.50. You now have people running around going like gold rushing, mining for gold, looking for little tiny flakes and saying eureka. This to me looks like yet another market bubble.
Well, you know, I think those are the types of signs you would look for at the peak of a market, but I think there's going to be a lot more people doing it. I think right now the media is focused in on the one or two people, the novelty who might be doing it. But by the time I think we do reach bubble levels in the gold market, everybody's going to be panning for gold.
What price is bubble level?
Well, I don't know, because we don't know where the dollar is going to be worth. I mean, but my guess would be that gold's going to $5,000 to $10,000 an ounce.
5,000.
He's telling us back there in the green room how he's getting all these new accounts opening up, you know, left and right, people wiring him all this money. He's been talking about this for 10 years, and only now people are, waking up to this idea of gold. Where you been all along?
2002.
But this is not the end.
Gold has been a terrible investment historically. It has been a poor inflation hedge. It pays you nothing, no interest, no dividend.
If you bought it at 300,
okay,
Mike.
so if you're a great market timer, right, Liz, that means you could probably be a great market timer in the stock market as well, and you make a lot more money.
You could have bought it at 300, 400, 500, 600, and still made a lot of money today.
He's saying that now.
You could buy it today at 9:30.
Well, Jordan, this is not the Peter Schiff show. Nevertheless, I just want to remind everybody that it was 4 years ago that Peter Schiff was saying $100 oil, and we were all going, never. He's saying $5,000 gold. What do you say?
I'm going to say that, firstly, on the oil aspect of things, I think Pete's partially right, or trending right anyway. Oil rather is a depleting asset. We're probably looking at 200 at some point, but we'll probably see 85. As far as gold goes, David, I think that we're definitely looking at higher prices. 5,000 might be a little Armageddon-esque. I think we're looking at probably 1,200, and you can see some very violent whipping back and forth like we've seen. I think you see 1,200, and eventually I think you're going to see 2,000. So you will get the commodities are volatile. They trade in a volatile fashion, and the fact is there are more people getting in on it. There are more institutions. We've seen the effect of hedge funds getting liquidated and forced out of the market. We've seen the velocity at which these things can correct, but I do agree that the path is going to be higher over the long
Terry,
term.
even Greenspan says, gee, food and commodities look awfully a lot like a bubble.
Yeah, I don't know. He should know, I guess.
Well, no,
but,
he doesn't know.
You see what's going on. You see what's going on the front page of the papers with they're trying to expand the Fed's balance sheet. That's another word for printing money. That's why gold's been going up.
But it's interesting, you know, Greenspan, when he was Fed chief, there was a bubble in the dot-coms. He couldn't see that. There was a bubble in housing. He couldn't see that. Now he thinks there's a bubble in food.
He saw it, but he saw it in 1996, a little early. So,
all right.
Irrational
on that point, on irrational exuberance, well, no irrational exuberance today. Kind of as close as we can get to these volatile markets to a flat line, though it is down almost 50 points. It's still not down to those very volatile levels that we saw weeks ago. The market remaining above 12,500, and the trading day has come to a close, but the business day continues. And here's the